Good day, everybody. This is Yin Yang in California with Morsels of a Thought number 1533. Today we are in Financial Friday. It's Friday. It is Friday. So we are in Financial Friday and we are using Chris Naugle's real estate edition of the Private Money Guide, Solutions to Finding Money, Where to Go, and How to Ask. This is his book, and I am aiming in morsels of a thought to give you morsels of a thought of wisdom that belong to other people that we can use. That when we know the right thing to do, it's called wisdom. And when we actually do it, that's called virtue. And I'd like to bring more virtue into this world. So this is how we impart some good wisdom from other people that for example, Chris Naugle. Good morning, Chris Naugle. Good morning, Tess Hulick. Good morning, John Clark. Good morning. So, why don't we just jump right in? Last time we were reading the preface, and this is oh, there we are. This is Chris Naugle writing that he can ask me to read this. I'd like to read this. I'd love to read this. He says, "Let me tell you what I wish I had learned when I started." So this is his preface. Like I mentioned earlier, the author says, that's Chris Naugle saying, like I mentioned earlier, my first real estate deal was a flip in 2006 at the age of 28. I was doing well as a financial advisor and owned two profitable retail stores, but I was not in a good financial position by any means, as I was simply getting by. It wasn't long before a realtor showed me a deal that looked like a great flip. Based on my, in hindsight, flawed calculations, I thought I could make $35,000 on this one deal. At that point in my life, this sort of money was a game changer. This deal looked like it was the answer to so many of my problems. The first step was to find financing for this deal. This proved to be challenging because I had no idea where to look for money to invest in real estate. I decided to take the most logical route at the time and ask a bank for the money. Now that is what we would normally think. And by the way, I want to make sure I let you know, this is Yin Yang speaking, that I have no idea about money. So everything in this book to me is new now. I am reading ahead only a little bit, and this means that I don't know what I'm talking about. I only read what he's talking about. Okay? I decided to take the most logical route at the time, says the author, and ask a bank for the money. This is where I began to realize how difficult this process could be. After a month of back and forth with necessary documents and an endless list of tasks, I received a commitment letter for far less than I needed. I was under the impression that the bank would give me the money I needed for rehab plus the purchase price, but I quickly learned that this was not going to be the case. They would only lend 80% of the purchase price and not a penny of the costs I would incur from renovating the property. Now I had a dilemma. I had to find the remaining money in only 1 week. The next idea that came into my head was to ask everyone I knew for a loan. After hearing the word no way too many times to count, I decided to max out my credit cards and take the maximum amount in loans from my life insurance policies, which ended up being just enough to revamp the property. After I was finished with renovations, I decided to rent it out for a year and then sell it for a profit. The downside is that the profit was only $8,000, nowhere near the $35,000 I was originally expecting. Even though it was not even close to my projected profit, it was enough to get me hooked on real estate, and I became extremely motivated to learn how this industry worked in the capacity of flipping houses. creating passive income, and ultimately becoming the bank. When executed properly, real estate has the ability to allow you to further your goals and to help you live the life you've always dreamed of. This is my give back to you so that you can avoid making the same mistakes I did when I first started out. Please know that I can't elaborate on every single one off situation since all deals are structured differently. However, you'll soon understand the process of money in real estate, and this will guide you through the secrets of money and how to implement what I do within your own deals. This is not a get rich quick scheme or even a simple answer to all of real estate related problems. I started with close to nothing and we have built an empire. No matter what your circumstances are, no matter where you are in life, this process will work. However, it will not be easy and it will take time. I believe it is your responsibility to chase your dreams and never let anyone tell you that you can't do the things you want to do or have the things that you want to have. I give you permission to dream the craziest dreams and one day watch those dreams unfold because of your hard work. No matter how old you are, don't let the fear of money stop you. Remember, money is just a tool. That's Chris Naugle, entrepreneur, consultant. That's his signature right there. Right there. Da 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 da. It's printed in the book. And next page. Chapter 1. Biggest barrier of entry into real estate investing. Money is the one thing that most people have all wrong in real estate. We all use it as an excuse, a crutch. We tend to think and say, I would love to do real estate, but I don't have enough money. Or my favorite excuse is, when this or that happens, I will invest in real estate. The fact of the matter is, in real estate and in life, it is never about your actual resources. It is about how resourceful you can be! Exclamation point. Fear is what drives this reaction to be negative, to make excuses, to think and to talk yourself out of your dreams. The right thing to do is start right here and right now. No more excuses. If money is something that has held you back, then you will find this information fascinating and incredibly useful. Let's start with some facts of why real estate is so unique and how money is all around you, just waiting for you to ask for it. Real estate is a tangible asset. That asset can be leveraged. That asset can be insured. That asset can be improved to force appreciation. That asset can provide passive income through rents, and that asset will always be in demand no matter what happens. Real estate can secure and protect an investment. First, you must learn how to buy real estate for the right price. Once you have that figured out, you have figured out the hardest part. Once you learn how to find the deals, you can make money so many ways, even if you never buy the property. We cover that strategy in my other book, The Raw and Uncensored Guide to Wholesaling. The Raw and Uncensored Guide to Wholesaling by Chris Naugle. It's his other book. I want you to get this book and I want you to get that book. I want you to get this book and he wants to get you to get that book as well. I mean, he wants to get this book too. Did you know that real property will never be worth nothing? Unlike other investments such as stocks, bonds, mutual funds, and many others that are available and recommended, real estate is an asset that can go up and down in value, but it cannot go to $0. Some of you are thinking, well, if it burns down or if a natural disaster destroys the property, it can. My answer to that is, I sure hope you were smart enough to buy insurance. You must understand the significance of insurance, specifically full replacement value policies, and they will be mandatory with each application in dealing with the money sources you will learn about. You have to protect your investors and your investment. And that is where a good insurance policy is essential. There are investor friendly insurance brokers who can assist you with coverage. Let me tell you a story. In 2008, while I was deep into my plaza development, we had a freak snowstorm here in Buffalo, New York, that resulted in over 3 feet of snow in less than 36 hours. It's pretty common for the snow to fall that rapidly here in Buffalo, but what followed next is not common. That 3 feet of snow all melted in less than 24 hours caused massive flooding. My strip mall completely flooded in the process. I had tens of thousands of dollars in materials, tools, and supplies that in an instant were destroyed. My first reaction was to panic. I was already behind schedule, over budget, and running out of money to pay those hard money lenders back, and now I lost everything I needed to finish in the blink of an eye. Luckily, I had this property insured, and after a few days, I was handed a check for the full value of all the losses, the cleanup, and the remediation. Had I forgot that one critical step, I would have been bankrupt, and I certainly would have lost the property and maybe a few fingers. The reason so many of us allow money to be our crutch has so much to do with living in a judgmental society and dealing with people who have a know it all mentality and fearful mindsets. In our lives, we have naysayers telling us we can't do this or we can't do that, or they gave us their opinion on our ideas without ever actually trying said idea themselves. They always know someone who tried getting into what we want to, but failed miserably, and they tell us those stories to try to protect us. They provide us with advice about the direction of our life. Unfortunately, these people are often the ones closest to us, family members and friends. We all have had someone stand in the way of our dreams. You have to make a decision to delicately or not so delicately tell them that this is ultimately your decision, your goal, and your dream. You must ask them to support you. If they can't, then say goodbye temporarily. This will not be easy, but you do not need someone standing in the way and telling you, I told you so, every single time something goes wrong. You must surround yourself with like minded people. This is underlined. People who have succeeded and who are successful. People doing exactly what you want to be doing. Your journey will be full of negative people. I like to call them dream killers, quote unquote. I can tell you from personal experience and from other stories I've heard from successful people that the ones who are trying to give you advice and protect you will later be your biggest supporters. However, not until you are successful. So move those people out and begin your new venture without them. I hope I read that right. Chapter 2, Money Sources. 8 resources you can tap into. Money is all around us. It is plentiful and there is no shortage of it at all. You need to learn where all this money is, how to find it, and how to ask the right questions in order to obtain it. Most of us have checking and savings accounts. These accounts are used to pay bills, fund occasional vacations, and provide needed resources if things don't go as planned. Although most people have money in checking and savings accounts, this will be one of the last places we look for money. The reason is because people view this money as being untouchable or sacred, and they certainly aren't going to risk losing their emergency money. In their minds, it's their only money, and they don't spend it other than for living and saving and the occasional gift giving. The money we need to look for is money that people view as long-term money or phantom money. Everything we will talk about in this booklet revolves around building relationships. The relationships you will build with lenders will be critical to your success. Lenders can be anyone from a personal friend to an established private lending company, and therefore we refer to them as relationship-based lenders. There are technically three distinctive types of private lenders. Each of the three types are based on the relationship between the borrower and the lender. The three types of lenders can be categorized as follows. Ugh, ugh. Okay. Primary circle. Family and friends. That's your primary circle. And then your secondary circle is your colleagues, friends of friends, personal and professional acquaintances. And your third party circle is accredited investors and hard money lenders. So here we have your primary circle, your family and close friends. Your secondary circle is your colleagues, which I spelled with properly this time, and your friends of friends, and your personal and professional acquaintances. Okay. And then your third tertiary circle, third party circle is your accredited investors and your hard money lenders. Okay. Yeah. The next two resources we're going to discuss will be better suited for your primary circle and possibly your secondary circle. They will require you to have established relationships and trust. Resource number one, hidden equity. Over the last few years, one thing is certain. Real estate values have been steadily increasing. There are some areas across the country that have seen a tremendous amount of growth. This means that almost anyone who has a primary residence which they have owned for 5 to 10 years or longer but haven't refinanced in a few years has hidden equity available. Any smart financial guru will tell you that having equity is great, but that if money is not put into motion, it's a waste. Money must be sent to work just like you have to go to work. The thing people don't understand is equity in your home will never change your situation unless that equity is tapped into and put to work to make more money. Now, I went and looked at equity. Equity, according to quickenloans.com, is the difference between what your home is worth and how much you owe on it. That was according to quickenloans.com. Oh, leave that on the floor. Okay, so, all right. Your job is to tell people how to do this. Since most homeowners likely have equity, you need to know how to get this money. The easiest way to do this is through an HELOC, Home Equity Line of Credit. Most banks will gladly open a HELOC with very little effort, low costs, and only a little bit of paperwork. In my experience, it takes less than 30 days to tap this resource. Banks understand equity and the safety of real estate security, therefore, they are more willing to lend you money using HELOCs. All right. All right. Now, I wrote this down. Um, stay on the screen. There we go. Okay. So, equity is the difference between what your home is worth and how much you owe on it. Quickenloans.com. An HELOC is a home equity line of credit. Okay. The process is pretty simple to get an HELOC. First, the bank will require some basic paperwork, including an application, tax returns, and a credit report. If they find your financial situation to be acceptable, they will issue you the line of credit and you will be able to use your home's equity. The interest rates on HELOCs are typically low since these loans are secured by real estate. But what happens if you can't access equity, either because your credit score is too low, you haven't owned your home long enough to get an HELOC, or you don't own a home at all? No worries, you still have options. Just about everyone knows at least one person who has owned their own home for long enough to have built up enough equity for you to use. Now, all you have to do is structure a win-win situation. First, you must have a subject property either identified or, even better, under contract. Next, you will show them how you are going to make money in your deal. Here is an example. And next week, we will go into this example in depth. $100,000 of a loan times 5%, which is the home equity line of credit interest rate. If it's equal to $5,000 a year or $416.67 per month of interest only payment. If you went to this person and asked for a $100,000 loan and offered 10% interest, here's what the numbers would look like. $100,000 of private loan for your deal times 10% simple interest equals $10,000 per year or $833.33 per month. To sum it up, the lender would net $5,000 in interest payments after paying the interest payment on the HELOC. So the difference between this 5,000 and this 10,000, there you go. Okay. All right, so I will go more into this next week. We will have this on the board as well, and then we shall move forward with what he says as he goes on. All righty, I'll talk to you later, old Kinderheck. Bye. Oh, in case you don't already know, old Kinderheck. Oh, thank you. Hi. Okay, old Kinderheck. Uh, Old Kinderhook was the guy who was a congressman. He always wanted to make sure everything went well and smoothly.